What if I told you that crypto is delayed until 2026 and that we just have to kind of, take it here in December and it could be very boring, volatility up, down, what's going on? Well, there are some signs that the proverbial can is being kicked down the road. And we had the Fed meeting today. We got the 25 basis point interest rate cut, but a very neutral tone from Jerome Powell. Now, keep in mind, Jerome Powell is going to be out, and whoever Donald Trump picks is going to be in. So we're going to get change of the guard there. But I want to talk about what's going on with something very, very big that impacts all of crypto. It doesn't matter which assets it's going to impact you. And I want to talk about some very important news on that front that we got today, something that's kind of like casting a shadow over the entire industry. And then we'll get into some other specifics in terms of why 2026 looks like, the actual time frame where we'll get some of these things accomplished and done, where we can maybe finally actually move up. You guys know it's all about patience in this market. It's all about just staying there, waiting for that right moment, being around, right? Being in the market, being invested. And these times where it's down, it's actually a good time to accumulate like your high conviction plays, right? So what I want to show you guys first, though, is I want to get into the market structure bill right now. And it's looking more and more likely that this is going to basically slide into January. So Eleanor Tourette, who is now with Crypto in America, she used to be with Fox Business. I've had her on my channel here a couple of different times. She made an update today, and it's talking about everything from the Democrats, Republicans, what the sides are saying. So they had a closed door meeting yesterday, and this is the bipartisan group that is being tasked with the market structure bill. And it's looking more and more likely that a pre-Christmas markup or, them coming to a decision here is becoming less likely. So supposedly people were leaving the meeting yesterday looking distraught, tired, exhausted. In fact, those were some exact words coming from some folks like Cynthia Lummis. She said basically everybody on this, working on this bill right now is just exhausted. And it's looking like they're going to just basically push the can into 2026. And we only have 7 working days left before members leave for Christmas break. Negotiations are expected to continue and through those 7 days. But I highly doubt this gets done, based on what I read today and some of the things, it gets done by the end of the year. So the market structure bill is huge because it's essentially going to allow us to know what the rules of the road are, right? And like exactly how this market is going to be structured, exactly how it's going to be classified, like what's a security, what's a commodity, how can one become a security or a commodity, right? Like all of these sort of things that we don't have right now. Like there's no blueprint if you're a builder in the space in the United States. Like the only thing we do know is that Bitcoin and Ethereum have been given special treatment because they have ETFs. And honestly, some other assets now too, right? XRP, Solana. So, but we still don't have full guidance, right? So that's all happening. But there's more here than just this. I think this is a huge, huge thing that we need if we want this market to go up. Like, if we want the big investors to continue to come in here, we need to know exactly what's what. Like, we need regulation, full on regulation. Okay. The other things that we need, I want to just talk at you guys a little bit here and give you guys kind of my breakdown on what I think the market's desperately in need for and in need of right now. And, it's in addition to all of these, things related to regulation. One thing that we're looking very, very closely at is rate cuts and the future of rate cuts. This means cheaper money at the end of the day. Cheaper money means liquidity expands. And when liquidity expands, we usually get risk on assets that pump. Crypto first, then tech, usually, historically, right? So we've had 3 here in 2025. It's looking like we can get some more rate cuts in 2026. I was hoping we get more out of Jerome Powell today. He took a very neutral stance. I don't know if you guys listened to that or watched it, but I do think 2026 is shaping up to be the heart of the liquidity wave. And with all of that, we've got ETFs now, and these are only going to mature. They're not new anymore, right? This 2024, 2025 time period, this was the exploration phase for institutions. They're finding out about these ETFs. 2026, and we're seeing this come out with a lot of the big banks and news. This is the deployment phase. This is where I truly think we get the merge of TradFi and DeFi. You know, Bitcoin ETFs, Ethereum ETFs, we're going to have staked Ethereum ETFs, RWA ETFs, AI and blockchain funds. I think we're going to have track records. We're going to have compliance approval as long as we get the market structure bill through. We're going to have liquidity profiles. This is going to allow now like full-on big banking to come in, pensions, sovereign wealth funds, insurance companies, endowments, international allocators. Like what we just came through in 2025, it was kind of a rocky road for the market and even for Bitcoin. Like Bitcoin really didn't do all that great. It didn't do too much. And I think a lot of the attention and focus went over to AI. We saw what gold did, right? But it was this kind of slow deployment phase of crypto becoming more than just like the evil stepchild, more than just this like weird pocket of the market over here. And you have to remember, like ETF adoption isn't fast. It's not all at once. It's slow, very slow, very slow. And then kind of suddenly explosive, right? When everything kind of lines up. But by early 2026, we're also looking at the Bitcoin supply. This is going to be at peak scarcity post-halving. The 2024 halving will be nearly 2 years old, and miners will be selling far less Bitcoin as we move into 2026. ETF issuers are going to continue accumulating daily. We've seen the numbers with the inflows. Long-term holders historically don't sell. I mean, we saw some of that happen at 100,000, but I feel like now we're kind of ready to make that next big push. Like 100,000 isn't scaring as many people. It's not creating cascades of liquidations. And the strongest part of the bull run historically has always come 18 to 24 months after the halving. That puts us the explosive window right around Q1, Q2, 2026. And the whole thing happening with Ethereum is interesting too. You know, real world assets being tokenized on chain. It's expected to really explode in 2026. All of the rails are being set up now. BlackRock, Fidelity, Franklin Templeton, JP Morgan, Citi, they're all building these tokenization pipelines. BlackRock just came out recently talking about their Ethereum staking ETF. This is their third ETF product. I mean, we're talking, you know, everything being tokenized here, from treasuries to money market funds to credit to real estate to private funds. And Ethereum's a big part of this mission. ETH is going to benefit, I think. Most tokenization rails are built on Ethereum. And then you've got staked Ethereum ETFs. This is going to attract institutional demand. Everybody loves yield. More activity equals more fees equals more Ethereum burned over time as well. And that's going to create scarcity. So this is a multi-trillion-dollar adoption wave. I just think we're early, and everybody wanted it right now. But once regulation is finally clear, we get all of these integrations, right? The Clarity Act, the market structure bill, stablecoin legislations totally worked out, registered crypto exchanges, commodity versus security categories, all that settled, ETF expansions for more assets, basket ETFs. Clarity is the number one thing right now still holding the institutions back. Yes, they have a path forward, but they don't have full guidance. Once all this stuff is removed, capital flows aggressively into this asset class. There's a ton of money tied up in the money market right now waiting to go in. And I think this is going to create what we've all waited for, the return of retail. And this time, you know, most retail, as we know, they don't buy until Bitcoin breaks the all-time high, ETH breaks all-time high, altcoins are pumping, meme coins are pumping. But institutions are already going to have their majority of liquid supply. And retail could come in, though, toward the back half of all of this and push prices vertically, like for that final push. So the big picture here, as I'm looking into early 2026, and by the way, if you guys are getting value here, definitely subscribe to the channel. A lot of people watch, forget to subscribe, so it really does mean a lot to me. And I'm here every single day grinding for you guys. But early 2026 has a setup very few cycles really ever get, or we haven't really had this setup like this before. Let me say it that way. Peak liquidity expansion. We've got now mature ETF infrastructure. We've got post-halving supply shock, tokenization now expanding and exploding, AI and crypto integration, same thing there, regulatory clarity, and then delayed retail FOMO. And this is why I'm not alone here saying that 2026, at least the front half of 2026, could be a very exciting time. And it could be one of those generational crypto moments. It happens quick, guys. I mean, if you were here back in 2021, it happens fast. And you just want to be here for when it happens. So I appreciate you all for watching. Thank you guys so much for all your support. If you're brand new here, definitely drop a comment, subscribe down below, come back. We're here every single day. And we'll see you guys in the next video.